bear raids and how and when do they work, if at all?
Okay, well, a bear raid is when a group of people typically get together and decide to drive the price of a stock down. And that might be because, well, invariably they think it's overvalued, for whatever reason that might be. Now, there's a suggestion there is collusion on the part of people that they are going, and I'm not sure if collusion is the right word, but certainly you are talking about a concerted effort, so it's going to be more than one person who is going to be shorting that stock. And invariably they are shorting it rather than just sort of liquidating their own holdings. The reason for it, it might be that they're looking to drive out the weaker hands, the longs in there who are not, obviously not really in there for the long haul, or had been looking for a quick profit, and now suddenly that quick profit's turned into a loss. So they're looking to sort of knock those weak hands out, and then ultimately sort of buy back in at a cheaper price, and extract value in that way. So that's really what a bear raid is about. Bear raids are difficult to engineer unless the stock itself is relatively illiquid. And trading volumes are quite light, unless you're really going to go in, with a huge, significant amount of gunpowder to give it a blast. So that's the nature of a bear raid. Yes, of course, yes, they can work. I mean, anything can work. You can, it's possible to drive prices higher and lower just through, sheer amounts of just throwing money at it one way or another.
Continuing on the bear raids, but do you think, are they harmful to the market in general?
I don't think so. I'd always been a bit suspicious when legislators want to ban short selling or bring in an uptick rule or any of these things like that. I think that markets. I've got to be a bit careful here because, I mean, you certainly do need rules and regulations for orderly markets. It can't be a free-for-all. But I think that I can't see there's anything wrong in a bear raid. If someone is driving down the price of a company, then ultimately there comes a time when other people are going to look at that and say, well, whoa, that's too cheap. That stock price should never be down there. Whoa, come in and you attract buyers in, and that's the very nature of a market. I think sort of the very act of short selling, the very fact that you have a market where short selling is permitted, at some stage those short sellers have got to buy back. So in other words, it might, you might have an acceleration on the downside to some extent, which is exacerbated by the short selling, but ultimately there's a break at the other end. So, I think there's nothing wrong with bear raids in the same way I don't think there's anything wrong with short selling.
Essentially, it's a correction, isn't it?
It's a correction.
In the price.
Absolutely right. Yeah.
Well, I suppose the context of the bear raid is the issue, isn't it? So do they raise ethical concerns over market manipulation?
Well, they can do. I suppose it's a question of what are those people doing outside of simply selling the stock? I mean, if there was any intimation that there were sort of false rumours being spread, about this particular company, and this is sort of, for instance, there's also the timing aspect here. Are people selling, for instance, ahead of some bad news, or selling and then coming out with a rumour about bad news? Now, those are all kinds of things that are absolute no-nos. But actually, sort of going out and deciding that to drive a share price lower. There are rules about it, there are regulations about it, and I think there are probably rules, I don't really know what they are, about acting in concert. But, to actually try and find the right value for a company, you're buying and selling, that's, I don't see anything wrong with that, but then maybe that's a different matter, I don't know.
Is that a knock on the door from the police out there, I heard?
Did you hear a knock on the door? oh, sorry. Sorry, I'm being very thick.
Does short selling create instability in companies' share prices?
No, I don't think so. I think short selling is an important and integral part of the market's function. There's basically, I wish I could remember this, and I'm going to sort of try and quote it, but I think there's an old saying that goes, whoever sells what isn't his'n has to buy back or go to prison. And, this is the very fact of it. I mean, when you short sell, you've got to be aware of the fact that, whatever you're selling can only go to zero, whereas it can, in fact, it can carry on going up the other way for wherever. So there are big risks in short selling, and in terms of sort of, if you're doing it on stocks, you have to go out and borrow the stock and you have to be able to borrow it. And I'll tell you, when you're doing that, if the stock gets called back in by the broker, then suddenly, as a short seller, you can be forced to liquidate your position in a situation where you really don't want to liquidate your position. So it's not easy being a short seller, especially of individual stocks. What's the alternative? You can sell an index, for instance, but I mean that's obviously a different thing. But no, I think it's just an important part of the market's function.